you love. Now there's an easier, more affordable solution without spending thousands. Audion Hearing makes high-quality, rechargeable hearing aids starting at just $98. Free shipping and dedicated one-on-one support in the comfort of your own home. No doctor's offices, no pressure. Clearer hearing delivered right to your door. Join over 1 million happy customers hearing life more clearly. Visit audionhearing.com. That's AUDIEN hearing.com.
My name is Dale Pazinski. I volunteer with United Way to help the homeless in my community learn computer skills and build a basic resume. I don't just wear the shirt, I live it.
Give, advocate, volunteer. Live United. Go to liveunited.org. Brought to you by United Way and the Ad Council.
You're tuned in to Money Matters Boston, 1120 AM This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the biggest challenges in financial planning is seeing the full picture. When your investments are spread across multiple accounts, it can be difficult to know how much you actually have and whether your strategy is really working. You might be taking on more risk than you realize or missing opportunities to better align your portfolio. Bringing your accounts together can help create clarity so you can see your total assets, your true allocation, and make more informed decisions about your financial future. Our new guide is called Consolidating Investment Accounts. It walks you through how to get organized, simplify your strategy, and build a more complete financial plan. Call 800-393-4001 to get your free copy today. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For many hardworking families and retirees, an energy bill comes with an impossible choice. Paying the bills, putting food on your table, and keeping your family warm in winter and your home cool for the summer. But it shouldn't be that way. For more than 40 years, Citizens Energy has made one simple promise: to help households afford life's basic needs. Through Joe for Oil, we help neighbors through the coldest winter nights. Now, we're building on that same promise with Joe for Sun, a new way to save on electricity year-round. Our solar projects are already in communities across Massachusetts and New York, helping thousands of households save money. For many families, that means saving up to 50% on electricity. No installation, no equipment, and you keep your utility company. Like my dad's program before, we keep it simple, helping lower your utility bill through community solar at no cost to you. Call 1-855-JOE-FOR-SUN or visit citizensenergy.com to see if you qualify. You've trusted Citizens Energy to show up when it matters most. We're still here, ready to help.
Sponsored by Citizens Energy.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today, we're talking about the top estate planning mistakes to avoid. Todd, a lot of people create their estate plan, but there are some that don't actually transfer assets into it. Can you explain why this is such a big mistake?
Sure. I mean, I'm going to try to explain it both from a revocable and an irrevocable planning standpoint. With the revocable, if you don't put assets in there, you end up leaving them owned perhaps jointly if you're married, and designated beneficiaries and the like. But if everything goes to the spouse, when one dies, then you've completely avoided your estate plan. In other words, you've set your trust up, but you went around it by leaving everything to the spouse instead of going through it by funding the trust and cramming down the assets to shelter some from estate taxes on the first death so there's less taxed on the second death. And ultimately, on the second death, if you don't plan, there could be a probate problem because everything would go to probate if it's in their own name. The other big reason is with an irrevocable trust, of course, not funding it also can result in estate tax problems by the same way it did with the revocable trust. But in addition to not funding them with the irrevocable, you don't even begin the 5-year waiting period to get the assets protected from the nursing home. So there's a much bigger problem not funding an irrevocable trust versus not funding a revocable trust. So make sure you fund your trust if you do your planning.
Well, luckily, Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by simply calling 866-848-5699, 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
It's Chuck, Mark, and Tucker with you today, and this morning at 8:30 a.m. Eastern Time, we got the Producer Price Index data for the month of April. Expectations were that headline was going to come in at 0.5%, core was going to come in at 0.3%. Instead, we got 1.4 and 1.0% respectively, which pushed headline up to 6% for the last 12 months now, and core PPI up to 5.2. Now, I do like to point out that the PPI is the most misunderstood price index in finance, in that most people think that PPI is tracking the cost of making stuff. People think it's like, oh, that means that producers are paying more for their stuff, and so that's going to mean that CPI rises later. No, that's not how it works. What it actually is the PPI is, you got to look at it backwards. Okay, CPI is what are you paying for things. PPI is what are domestic producers receiving for their production. So it's reversed first and foremost. The other thing that you have to remember, the PPI excludes imports. So this is a big thing in the last year because there's nothing tariff related that gets into PPI. It's only measuring domestic producers. So you can have some blind spots that show up as a result of that. But so again, don't think that this means, that means that like CPI is going to be 1% next month or something. No, it doesn't work like that. It's just giving you another look at, how costs are being passed through the system, and it's from a different point of view, and you have to accept that for what it is. But he got this hot inflation report, and, I went over to Marc about a half hour after that as I was kind of digesting it, and I said, Marc, I want to, just kind of look at some things when we talk about, longer term inflation and break evens and things along those lines, and, what's going on with tips and what are they telling us about inflation. And without even talking to Tucker ended up putting a piece from the Wall Street Journal titled "Wall Street is Getting More Anxious About Long-Term Inflation" as the top piece in our stack, despite us having no communication about Marc and I's conversation. This just ended up there, which means that Tucker and I are very much just vibing right now. It's the vibes are good.
Also, it's the biggest story in the world.
Well, here's the thing: is
no offense, Tuck.
None taken.
Excuse me, Chuck.
No, it's fine. I appreciate that backhanded compliment or backhanded just face slap to Tucker.
I do too, actually.
It's nice. It's kind of like, oh, only a moron wouldn't have put this first in the stack today. There's kind of the implication, but I digress. Here's the thing. Globally, sovereign bonds have been melting down for a little while now. Like if you were to go and take a look at the Japanese 10-year treasury, just as an example. It's at 2.55% right now. 5 years ago, it was at negative 0.1%. And really, even in the last year, it's gone from like 1.25% last February to 2.55 now. If you look at the UK and their 10-year yield, a lot going on right now with some issues that they're seeing. UK 10-year yield's gone from, again, about 0% 5 years ago up to 5.04 now. In the last year and a half, it's gone from 3.84 up to this 5.04 reading. So this is not a U.S.-only issue, but globally, sovereign bonds are kind of sniffing out, hey, you guys are trying to make the math, but the only way that the math actually maths is if yields go up because inflation is running structurally hotter than it was before. Population growth is slower, which means deficits have to be bigger in order to pay for all this. No, we're not going to be able to just figure this out and paper it over. Interest rates are going to have to move up, and you're seeing it to a more muted effect in the U.S. right now, I think, probably because with oil still being priced globally in dollars, there's a lot of money flowing into dollars in order to buy higher-priced oil at the moment. But as soon as that reverses, I think that you could end up seeing some real problems with long bonds in the United States because long-term inflation, I got to tell you, I'm very skeptical it gets back into that 2% range anytime soon. You might have pockets where you get down into like 2.5% like we did last year, but I think fundamentally, structurally, you are heading towards a period where long-term inflation probably is closer to 3 to 3.5 than 2. That's not crazy. That's not something that is, horrible, but it's a fundamental difference from the mid-90s through late 2010s, and I think you need to understand what that means as far as the economy, asset classes, and what can come from that.
Yeah, not without a huge opening in economic slack, and even then, that's not a guarantee if expectations swamp the slack component in the inflation process, and I'll just say it in plain English. Normally, a recession gets inflation down. But if people expect inflation to continue, you get stagflation, the stag being stagnation, the inflation being the inflation part. That term was invented in the 1970s because we had that paradoxical outcome. Everybody expected inflation to come down in 73, 74. It did not. We realized later that you need to be aware of the expectations part, our expectations, people and firms, of the inflation.
Humans.
Yeah, of the inflation process. Fed credibility plays into that as well, something I imagine we'll be talking about today.
So what you're seeing is when you take a look at how to measure this, there are all different, financial instruments out there. There are inflation swaps. There are break-evens on treasuries indexed for inflation versus treasuries that are not. You've got all these different, items that you can look at in order to say, hey, how is the market pricing in inflation right now? And when you look at them, the thing that you're starting to see priced in is higher for longer inflation. Now, higher for longer doesn't mean that we're going to go back to, 9% inflation like we saw in 2022. But I got to tell you, this is still going to depend, at least, next couple of years. It's going to depend on what happens with the Strait of Hormuz and when it reopens into what capacity. It's, there is a path where if you want to look at some of the really gnarly stuff, there's a path where inflation does, move well beyond 5% annually if the Strait of Hormuz remains closed for any extended period, through this summer.
I mean, there is another path. The Fed could kill. It's interesting. Germany didn't have the 70s inflation that we had. Japan, I think, escaped it too. So it raises, researchers explored these cross-country situations a lot
Yeah.
after that great inflation experience. So I guess just cutting to the chase here, the Fed could kill this in the cradle. Awful expression, but captures it.
Basically by killing the economy, correct?
It would have to. It would probably have to inflict a lot of pain on the economy. Now,
do we get any sense that, again, even let's, Powell's moving on at this point. Warsh is going to be officially confirmed as chair probably in the next week or so. Do we believe that, look, even under Powell, okay, the Fed was very much in the business of not wanting to create a recession in order to staunch inflation.
Totally.
I have to believe, given what we know about, Warsh coming in and what he's stated he wants to do policy-wise, and again, I've maintained that, hey, once you're in the chair, you
Maybe.
feel the gravity and you often see someone change what they're going to do. But I can't see Warsh or, quite honestly, anyone else who's sitting on the Board of Governors or, as a regional Fed president, coming out in large enough numbers being like, yeah, you know what? We're gonna be Paul Volcker because there's just not the appetite for that right now.
There was no appetite for Paul Volcker to be Paul Volcker before Paul Volcker. You have to we have the benefit of history. They did not.
Yes.
So before Volcker, you had Miller and Burns. They didn't have the authority to do what Volcker did. Carter, to his credit, gave Volcker room. Reagan, to his credit, even though they chafed behind the scenes, they gave Volcker the room to inflict economic pain.
Sure.
I don't know that we have the we don't have the political will out of the Trump administration. You can love him or not like him, but he is not a hard money guy. He's for easy money under all circumstances. So I don't know that the political will exists to allow the Fed to inflict economic pain, Chuck.
It doesn't exist anywhere because ultimately our financial markets at this point, and this is something that's evolved over the last 20 to 25 years, in my opinion. They have evolved, and this is not my own quote, so I'm stealing this, but I use it because I think it's a good one. Our financial markets have become political utilities. And what I mean by that is
I like it.
There's a reason why President Trump points out, hey, stocks are at all-time highs, because it signals something to the broader group of people that participate politically. And as a whole, as a society, we look at financial markets now and think that it says something about the political system when, in fact, it's really just telling you, okay, like, here's, what we're willing to pay for corporate earnings. And this has been a transformation over the last 20 to 25 years. So, again, it's gone through, multiple administrations and multiple parties. Like, this is not any one person who's responsible for this. It's just how society has transformed them as a whole.
Yeah.
But I believe we're kind of at a point now where it's like, the 1970s from a stock market perspective, I don't think any politician would allow to happen now because of what it would mean for them and their party politically. And the problem there is the distortion that you end up with in the economy because of that.
They remember the Great Depression. That generation lived through it. They fought in the war. They saw what stocks were only owned by 2% of Americans. Then now the number's over 50.
Sure.
The 29 crash killed confidence to the point where it depressed spending on durable goods by people who didn't own stocks. They remembered that. They would never have thought of using the stock market as a policy tool, as the Fed uses
today,
it.
though.
And Bernanke's partly responsible for that. And Greenspan is, too, as much as I respect and admire them.
Correct. Again, this goes back like 25, 30 years.
Yes, you actually said that. No, you're right. A lot of people are to blame.
Yeah, it's where it is in our broader zeitgeist now. Let's take a quick break. When we come back, we'll talk about what we're seeing from gas prices and how it relates to wage gains that we've seen. They're being eaten away by rising gas prices. We'll discuss after this.
Smart financial talk whenever you want. Find the Financial Exchange on YouTube. Hit that subscribe button and keep up to date on daily business news from New England and around the country. This is the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the biggest challenges in financial planning is seeing the full picture. When your investments are spread across multiple accounts, it can be difficult to know how much you actually have and whether your strategy is really working. You might be taking on more risk than you realize or missing opportunities to better align your portfolio. Bringing your accounts together can help create clarity so you can see your total assets, your true allocation, and make more informed decisions about your financial future. Our new guide is called Consolidating Investment Accounts. It walks you through how to get organized, simplify your strategy, and build a more complete financial plan. Call 800-393-4001 to get your free copy today. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Some of the biggest estate planning mistakes are the ones you don't even know you're making. At Cushing & Dolan, they've seen it all. Plans that aren't complete, that only rely on a will or lack of funding of a trust. These are the kind of mistakes that can lead to probate, unnecessary taxes, or even putting your assets at risk. As your life changes, so should your estate plan. Marriage, grandkids, new assets, and even changes in tax law can impact how your plan should be structured. That's why Cushing & Dolan created a brand new guide called Detour Ahead, Estate Planning Potholes to Avoid. It walks you through the most common and costly mistakes and how to help protect your assets, your family, and your future. Call 866-848-5699 to get your free copy today. That's 866-848-5699. Or you can request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our #1 killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
So yesterday we got Consumer Price Index data. It showed that for the last 12 months, CPI is running at 3.8%. We also have wage growth data from the Department of Labor over the last 12 months, which is showing that wages grew somewhere around 3.6%. Now, here's the thing. This is all estimation. Again, prices may have actually risen at like 3.9. Wages could have risen at 3.4. Wages could have risen at 3.9. Inflation could have been, So again, like the specific numbers, don't pay too much attention to them. Directionally, though, here's the deal, is that wage growth and inflation for the last 12 months are probably pretty close to equal, which means that any gains that you've seen from your salary have very likely been eaten up by additional costs in the aggregate. And the other thing that we know is based on what we're seeing from, further gas price moves that have happened over the last, month since this, since the April data was collected, inflation is likely, I'm guessing that headline's probably going to be running somewhere between like 4.1 and 4.3 when we get the May data that comes out. And I know that wages have not accelerated similarly for the month. So what I think you can say is, hey, by the time we get the May data, pretty good chance that wages will be trailing the inflation rate by 0.25% to 0.5% over the last 12 months. And this is ultimately not great because it means that in real terms, you can't buy as much stuff, which means that A, you feel kind of bad about your financial situation, and B, it potentially puts some pressure on sales numbers for non-energy businesses because consumers have less money to spend at those other businesses and potentially pull back from spending in those areas instead.
Right. Yeah.
Which is probably why if you take a look at like retail stocks, they've been in the toilet for the last month. Like they haven't gone anywhere.
Yeah, and one of the at the crux of the dilemma for the Fed, which we're talking a little bit about how monetary policy should respond earlier, they could allow demand just to continue to expand. The problem with that is that it'll push up inflation further.
Yeah.
This is why the choice typically involves, do we impose pain on the economy to get inflation down or not? If the answer is not, you're accommodating it, and that can create that can cause inflation to become entrenched. That's one thought. Another is, well, this is why inflation is a form of taxation. It does ultimately come down to too much money sloshing around. I'm not blaming the Fed for the oil price spike.
No, they can't do anything. They can't print oil any more than you and I can.
No, I mean, there is this argument. It's interesting. Some researchers say, well, the 70s, the oil price spike was not actually outside the economy. The Fed allowed it, and other central banks allowed it to happen by overstimulating demand. It's kind of an interesting academic debate. So I guess what I'm saying is, if somebody's listening to this and they've heard about that, they remember that technicality. I'm acknowledging it, even though I don't think you got to do a lot of sophisticated statistical analysis on the most recent series of events to get at the cause of it.
When we look at, again, kind of where things go over the rest of the year, the piece that is interesting to me that could provide a little bit of counterbalance to this, not necessarily in a good way, we've seen some signs that we may be, entering kind of a nascent acceleration in hiring. There's been some green shoots over the last month or two. And this is happening against the backdrop of a labor force that is probably not growing due to the combination of baby boomer retirements and changes in immigration. And the one piece that you may see, which, again, this would be the piece that would scare the Fed, quite honestly, in my opinion, is, hey, if you don't have much labor force growth, but companies are trying to ramp up hiring, what do they need to do in order to hire? They need to raise wages more quickly. I think if you saw that would be the thing that spooks the Fed, because then you get into the position of, great, now do we have, this wage price spiral that starts happening? And do we start seeing, that cementing higher for longer inflation because of it? So just something to watch. When you don't have much labor force growth and companies start trying to hire, there's only one lever they can pull, and it's higher wages. And that's not what the Fed wants to see.
So maybe, the demand component is not going to drive the inflation process in this inflation cycle. Like it was part of it in the last cycle. There was that debate. Was it the COVID shocks? Was it the Trump and the Biden stimulus?
Sure.
Was it the Fed? The latter three, the stimulus and the Fed, would be part of the demand component of the inflation process. But again, expectations play a role and shocks play a role. This is why forecasting inflation is such a fraught exercise.
Let's take a quick break here, but when we come back, we got quite a bit that we're going to get to. We've got Wall Street Watch, and then we are going to be joined by Todd Lutzke from Cushing & Dolan for Ask Todd. Todd's here to answer your estate planning questions live on air. Get them ready, because Todd Lutzke It's coming up next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Some of the biggest estate planning mistakes are the ones you don't even know you're making. At Cushing & Dolan, they've seen it all. Plans that aren't complete, that only rely on a will or lack of funding of a trust. These are the kind of mistakes that can lead to probate, unnecessary taxes, or even putting your assets at risk. As your life changes, so should your estate plan. Marriage, grandkids, new assets, and even changes in tax law can impact how your plan should be structured. That's why Cushing & Dolan created a brand new guide called Detour Ahead, Estate Planning Potholes to Avoid. It walks you through the most common and costly mistakes and how to help protect your assets, your family, and your future. Call 866-848-5699 to get your free copy today. That's 866-848-5699. Or you can request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
In Massachusetts, summer starts at the farmers market. Longer days, fuller tables, and the best local food coming in fresh each week. Find just packed produce, responsibly raised meats, small batch cheeses, fresh caught seafood, and thoughtfully made goods. It's where neighborhoods come together and local food shines. Stop by your market this season and support farmers and makers across the state. Sponsored by Mass Farmers Markets. Growing farmers markets across Massachusetts. Find your local market at massfarmersmarkets.org.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Consolidating Investment Accounts. Mike, how does someone end up with just this sprawl of different accounts over time?
We've all seen it before with family members or even ourselves, but according to the BLS these days, the average person stays at a job fewer than 4 years. And so imagine you're job hopping from place to place. You might have a retirement plan through there. And all of a sudden, a decade into your career, you could have 2 or 3 different retirement plans just from, changing jobs and taking that next promotion at a new place.
It doesn't even just happen with different retirement or investment accounts. It can happen with bank accounts or insurance policies. You can end up with stuff scattered everywhere.
Well, we all know that, that aunt or that family member that is always scouring for the best CD rate or interest rate on the savings account, or, has some money with this broker and this financial services company. And all of a sudden, you can be looking at a situation where over the years, you have a dozen different places where you keep assets, and that becomes more and more complicated to ensure that your spouse is on there, that you have beneficiaries aligned properly, and that you can actually monitor these things.
Folks, our guide is titled Consolidating Investment Accounts, and there are 2 ways that you can request it. The first is by calling 800-393-4001. The second is by going to armstrongadvisory.com. That phone number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are mixed after sentiment took a hit on the heels of a hotter than expected producer price index, where wholesale prices in April rose the most in 3 years, adding fuel to inflation anxiety. President Trump also landed in Beijing this morning with several CEOs, including Elon Musk and Jensen Huang, for his summit with Chinese President Xi Jinping. Right now, the Dow is down about 0.2%, S&P 500 up modestly, only 5 points higher, NASDAQ up about 1/3%, Russell 2000 selling off over 2/3%, 10-year Treasury yield up 1 basis point at 4.481%, and oil up 1.25%, trading at $103 a barrel. Shares in Chinese e-commerce giant Alibaba rising over 6% after it posted an 84% drop in first quarter profit and also reported heavy investments in AI. Meanwhile, according to the Wall Street Journal, Walmart plans to cut or relocate about 1,000 corporate employees. Walmart stock is up modestly. Elsewhere, EchoStar shares are climbing 2% after the FCC approved the company's $40 billion sale of wireless spectrum to AT&T and SpaceX. And NextPower shares are surging 12% after the energy technology company raised its full-year revenue guidance. I'm Tucker Silva, and that is Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutzke is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutzke.
As promised, we're now joined by the one and only Todd Lutzke from the law firm of Cushing & Dolan. We get the phone lines wide open for you because we get this is your chance to ask Todd your estate planning questions live on air right now. 888-205-2263 is the number. Again, that is 888-205-2263. And remember, this is your chance to ask Todd your estate planning questions live on air right now, and we usually get through 2 to 3 of these, so get calling early to make sure we can get to your question. That phone number again is 888-205-2263. Mr. Lutzke, how are you doing today?
I am never better, and you?
I'm great.
Awesome.
Where does a king put his armies?
That I don't know. I'm not a king.
In his sleeveys.
His sleeveys?
Yeah, in his sleeveys. Todd, I want to talk to you a little bit about trusts, and trusts as part of an estate plan, as one would expect. At what point does it become beneficial to a household to have multiple trusts as opposed to just a single one for their assets?
So that is really driven by, I think, by the federal exemption. So the federal exemption tends to go up and down, but let's say you have today a $15 million federal exemption. So for everybody listening, that's the amount of assets that you can pass to somebody other than a spouse and not pay tax. Go over that, and of course we got a 40% tax hit per person. So at a bare minimum, I would say if you're at 15 million or under, I'm thinking that should probably be a joint revocable trust because it's a large estate, but joint revocable trusts. And I think if you're 4 million or below, I don't know if you weren't really asking this question, but if you're 4 million or below, you probably might be considering and over 65, let's say, or 60, you probably also might be thinking about whether you want a revocable or an irrevocable trust. But for a joint trust for a married couple, I'd say 15 million is a good number.
At any point in that discussion, are there certain types of estate plans where it may make sense to have different kinds of trusts fulfilling different roles within that estate? Yeah,
so when you get like larger estates like that, sometimes you might have somebody that's got a $12 million estate, let's say, but, a $4 million life insurance policy. Well, that's just an asset that shouldn't be in there. To me, I would say let's just make that asset. Why do I want to increase my taxable estate by $4 million? Maybe not so much for federal, but for Massachusetts, right? Why do I want my estate to be $4 million higher if I don't have to be $4 million higher? How and why? Well, then I would be thinking of a separate kind of trust, probably called an irrevocable life insurance trust, where you might want to take that asset and put it in there, that asset being the life insurance policy, put that into the irrevocable trust, and thereby making it not only income tax-free, which is what it is in and of itself, but also estate tax-free, both federal and state.
Talking with Todd Lutzke from the law firm of Cushing & Dolan. Phone lines are open at 888-205-2263. That is the number to call to ask Todd your estate planning questions live on air right now. We do still have room on those phone lines. Again, that number is 888-205-2263. We're going to take a quick break here, but when we come back, we're going to get right to your questions with Todd. That phone number again is 888-205-2263.
Ask Todd with Todd Lutzke every Wednesday at 10:30, only here on the Financial Exchange Radio Network. It's important to update your estate plan as changes occur in your life, or you can wind up with significant issues that may affect your future. Get Cushing & Dolan's new guide called Detour Ahead, Estate Planning Potholes to Avoid. Call 866-848-5699 and get your copy today, or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Over the years, it's easy to collect investment accounts, including old 401ks and multiple IRAs. But at some point, it can get hard to keep track of what you actually have. Too many accounts can lead to confusion, overlapping investments, and sometimes missed opportunities. Our new guide is called Consolidating Investment Accounts, and in it, you'll learn how to simplify your financial life, giving you a clearer picture of your strategy, your risk, and your progress. The guide will also walk through how to avoid common mistakes and build a more organized, intentional plan. Call us today at 800-393-4001 and get your free copy of our new guide called Consolidating Investment Accounts. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For many families, an energy bill can mean difficult choices, wondering when or even how it will get paid. It shouldn't be that way. For more than 40 years, Citizens Energy has helped families afford life's basic needs. First through Joe for Oil, and now through Joe for Sun. A simple way to save on electricity at no cost to you. No installation, no equipment, and you keep your utility company. We keep it simple and help you lower your utility bill. Call 1-855-JOE-FOR-SUN or visit citizensenergy.com to see if you qualify. Sponsored by Citizens Energy.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Todd Lutzke answers your questions about estate and elder life planning every Wednesday at 10:30, right here on the Financial Exchange Radio Network.
Got Todd Lutzke here from the law firm of Cushing and Dolan. We do still have room on the phone lines. 888-205-2263 is the number. Again, that is 888-205-2263. Todd, at what point does trust work that someone has previously done turn into a problem if it has not been updated appropriately? Like, what are some of the things that would cause someone to need to update an estate plan?
And I think that's a great question, because so many people who might have already done their estate plan think, oh, I'm all set, I don't have to do anything. Well, no. Again, one, I think if you're 10 years, 15 years in on an estate plan, I probably would say, you know what, maybe I should pick it up and review it. Why? Perhaps my assets have grown significantly. That would be a reason. I'm older, of course. So maybe if I did revocable trusts, I might want to think about changing my estate plan to an irrevocable trust, depending on how large my estate has grown. So obviously, you know, when nursing home concerns weren't an issue, maybe they more are on your mind now. I would say things like, you know, what if I've lost a spouse? You know, even though you've done your estate plan, when you lose a spouse, the problems I've seen are people would say, oh, I got these two trusts and my spouse died. I'll just take everything out of my spouse's trust who's deceased and put it in my trust.
That's not good.
Oh, not only is it not good, it's not permitted by the terms of the trust. But, you know, so someone's breaching their fiduciary duty, number one. But number two, you've now completely blown the estate plan. You've now put all the assets back into the hands of the surviving spouse, bumping up the surviving spouse's estate to a point where it's larger, perhaps, than the exemption that was in effect, or that is in effect, on the date of death, thereby creating an estate tax liability, whereas one didn't exist if you left them in the old trust. So I think that's a really big problem. But that's why you call the lawyer. You call and say, I lost my spouse. What do I do? Please don't call the spouse and call the attorney and say, here's what I did. Is it okay? I always hate it when they start the conversation. Here's what I did. Okay, that's bad.
So this is not a situation where it's better to ask forgiveness than permission.
Right. I think that's a good analysis. So, folks, these are just some of the potholes that we encounter when you have an estate plan or are thinking about doing an estate plan. So this guide is good for both folks, whether you've done the planning or you haven't done the planning. I think it's going to help you. You know, for people who haven't done the planning, don't not plan because you think you have a will and that's all you need. Don't, you know, rely on a nominee realty trust as the only item you have. Don't sit around and think, oh, I don't have enough assets, I don't need to do a plan. Well, there's a lot of other reasons to do planning than just taxes. So, folks, call and get the guide, Estate Planning Potholes to Avoid, 866-848-5699, or legalexchangeshow.com. Again, 866-848-5699, or legalexchangeshow.com. And you can always go to Cushing Dolan PC, our Instagram page, for much more information.
Todd, got a caller for you here. Let's go to Paul in Hanover. Paul, what is your question for Todd Lutzke?
Yeah, good morning. I had a question regarding, I have a revocable trust that was put together about 15 years ago and updated maybe 5.
Okay.
And I'm 65, and I'm looking at, like an irrevocable for the home only for that 5-year look back.
Yeah.
When do you, what's the downside, I guess, of doing something like that other than maybe losing the value or the equity of the home?
So you're 65. Are you married?
Yes.
Kids?
Yes.
Good.
Three.
Last question, excuse me. When we talk about switching to an irrevocable trust or adding one, usually you probably won't need both is my point. But how much are you worth in total, including the house? Meaning, are you more than $2 million? And if so, are you more than 4? Those are the Massachusetts thresholds that I worry about.
More than 4, yes.
So if you're more than 4, the question is, do you really need the irrevocable trust, right? If you've got enough assets, and again, I don't know how much you're worth, but if you have enough assets, you could be self-insured, meaning, if you start adding up your assets and investing it at, say, 6% plus Social Security and pension, do I have enough income coming in that I'm really able to provide and pay for the nursing home anyway, and so I don't need to worry about protecting my assets? Do you think you're in that category?
Close, I guess. I really haven't done the math, but it depends, obviously on longevity there too.
Sure. I mean, you're going to need to cover about, $125,000 and $30,000 a year, maybe more, from the nursing home. So it's not a small number. And so I think that's the first thing. That's the only reason I'm hesitating on this, but I will address your question. Let's assume you do need to protect assets from the nursing home. Probably if you do need to protect them, you probably might be wanting to protect even more than just a house. You might want to even put some money in. When you learn how they work, because you're asking me about the downside, there really isn't. Other than you can't refinance the mortgage on the house. You can keep the mortgage, but you can't get a new one unless you take it out of the house, start the 5-year clock over again. So other than that, there's no downside. You live in your house, you pay your bills, you can sell your house anytime you want from the irrevocable trust. You can have the trust buy another house. The trust is still set up as a grantor trust, so you get your $500,000 capital gains exclusion. There's no adverse tax consequences when you sell the house. You can manage your money, collect the income. I mean, it's really, I'm going through it quickly, but there's really not a lot of downsides at all. So I think it might be worth exploring, but get a handle on your assets, and then maybe you can decide whether putting more than just a house in is important.
Todd, I got another one for you. Let's go to Steve in Weymouth. Steve, you are on with Todd Lutzke.
Hi, guys. Thanks for taking my call. I was wondering about the $15 million exemption where you don't have to pay taxes.
Yeah.
If your estate is $20 million, do you just pay on the over $5 million, or do you get taxed on the whole thing?
So one follow-up question. Are you married?
Yes.
So if you do basic planning, meaning a revocable trust, right? So in your case, if it's $20 million, we might do 2 separate revocable trusts and then fund those revocable trusts. Remember, they're revocable, so it's just like it's still you, but they're owned by the trust. The reason I'm telling you that is because with basic estate planning, we now can double your exemption. So if you do basic estate planning between you and your spouse, we can shelter up to $30 million from estate taxes. So if you're worth 20, you're not going to have to worry about paying estate taxes, at least not in the short term or even perhaps the long term. But that would answer that question. But let's address your question, assuming that you had, let's say you're married and you're worth $40 million, to just make it the point, and you still did your basic estate planning, which I certainly would recommend. Now we would only have to pay tax on the $10 million that we are over the 40. I'm sorry, over the 30. So, but remember, $10 million. If you live in Massachusetts, it's not just the 40% on $10 million, which is $4 million. You've got Mass, and Mass is over 10%. Mass is close to 16%. So, I mean, you're looking at every bit of 55% total estate tax between federal and state on the amount over. So, you would probably even do more planning than basic estate planning if you were in that realm. But if you're in the $20 million realm, at least basic estate planning, and then we can focus on what we might do for Massachusetts. I stress this only because I had a client that came in that was worth about $40 million, not married, but with a significant other for 30 years. And I explained to them that, wow, if you get married, we can save you like $20 million in estate taxes. Yeah, well, whoa, you should see how fast they ran to the courthouse, right? I mean, it's one of those things where they just don't think about it. I get it. You're not married. You know, why ruin a good relationship by getting married? You've been together 30 years, kids from different sides of the relationships. But you know what? Sometimes getting married can make sense. And in this case, it certainly did for them. And it could, well, you're already married, Steve, but not that it could for you, but planning, now that you are married, can take advantage of this doubling of the exemption.
Mr. Lutsky, thank you so much for joining us today.
Always a pleasure. Thank you.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated.
Quite a bit to get to in the second hour. We'll talk a little bit about the U.S.-China summit that is kicking off today with President Trump landing in Beijing earlier this morning. Also, we're going to be covering a little bit more on the spring housing market and what we are seeing there. And then we got to talk about the tomatoes because there's a problem with tomato prices, and I got to tell you, it's gonna be something we're gonna have to discuss in depth in hour 2. All that and more is coming up in just a little bit.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your kids to your accounts or adding their names to your real estate deeds as a joint owner. Won't this avoid probate?
You're absolutely right. It would avoid probate, but there are better ways to avoid probate than just doing something simple, right? It's not, simple isn't always better. Throwing a name on an account or adding a designated beneficiary or a joint owner on a piece of property might not be the best way to go. Here's the problem. If you name one of your children as a joint owner and you have 3 children and you put that child on just because it's convenient and they're geographically close to you, well, you could be accidentally disinheriting your other children because this property, this asset will only go to that child. That child doesn't have to give it to the other kids. So that's a problem. And if you put your name, if you add a child's name to your real estate, now you're exposing it to that child's creditors, that child's potential divorces. That's never good. And plus, you've lost control over it. If you try to sell it, you need that kid's permission, and half the money would go to that kid. Please, folks, set up a trust, fund your trust much better than just trying to do it shorthanded and just give away assets or adding names to accounts.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network.
For many hardworking families and retirees, an energy bill comes with an impossible choice. Paying the bills, putting food on your table, and keeping your family warm in winter and your home cool for the summer. But it shouldn't be that way. For more than 40 years, Citizens Energy has made one simple promise: to help households afford life's basic needs. Through Joe for Oil, we help neighbors through the coldest winter nights. Now, we're building on that same promise with Joe for Sun, a new way to save on electricity year-round. Our solar projects are already in communities across Massachusetts and New York, helping thousands of households save money. For many families, that means saving up to 50% on electricity. No installation, no equipment, and you keep your utility company. Like my dad's program before, we keep it simple, helping lower your utility bill through community solar at no cost to you. Call 1-855-JOE-FOR-SUN or visit citizensenergy.com to see if you qualify. You've trusted Citizens Energy to show up when it matters most. We're still here, ready to help.
Sponsored by Citizens Energy.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide this month titled Consolidating Investment Accounts. Mike, what are some of the problems that people run into when they have accounts scattered everywhere?
The first one is just difficult to maintain and monitor. I can't tell you how many times I've met with somebody who has a life insurance policy that still has their brother on it instead of their wife or their husband, for example. So it does become really tough to monitor those things. If you're getting to required minimum distribution age, there can be certain rules around where you take money out of specific accounts, and if you miss it, there can be tax penalties. So it just becomes complicated to administer everything.
Despite that, there are still some cases where it makes sense to maintain a number of separate accounts as opposed to consolidating.
Oh, absolutely. I mean, we all know cases where, hey, that new bank is going to give you a better CD rate or introductory rate, and that can be worth real money. In other cases, if you have a retirement plan, there can be special benefits to keeping the money there. Maybe it is a excellent plan with really low costs. Maybe it'll allow you to avoid a required minimum distribution if you're still working into your 70s. Or there can be other strategies too, having money in a retirement plan and allowing you to do what's called a backdoor Roth conversion, all sorts of things that allow you to take advantage of having accounts in specific places.
Folks, the guide is titled Consolidating Investment Accounts, and there are two ways to request it. The first is by calling 800-393-4001. The second, by going to armstrongadvisory.com. That number again is 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
It's Chuck, Mark, and Tucker with you here, and we're going to kick things off taking a look at the markets. And we got the S&P 500 up 10 points right now, about 0.15%. The Dow is off 300 points, about 0.5%. NASDAQ Composite up 0.2%, about 167 points. So mixed markets thus far. Russell 2000 joining the Dow in negative territory as well. 10-year Treasury continuing its recent sell-off, up another 1.7 basis points to 4.488%. 30-year Treasury, by the way, continuing to stay above 5%, now at 5.047. So long bonds continuing to get hit over the last few days with some higher inflation numbers. We did get producer price index data this morning that was, it was a little warm. To put some of this in perspective again, this is all... Don't get too sucked into any one particular month because it's one piece of data from 1 month, and I understand that. But the point that I will make is the expectation was that we were going to see PPI come in at 0.5%. Instead, it came in at 1.4% for the month. And that is, when you look back over the last 12, 13 years of data, it's by far the biggest miss to the top side that we've seen relative to expectations. And so that directionally says something, and I think it's worth paying attention to, especially because in now 7 of the last 8 months, the miss on PPI has been top side, not downside. So just something worth paying attention to there. Taking a look at other markets, the dollar is up 0.24% to 98.415. Gold up $3.40 an ounce to $46.90 and 10 cents, and we've got crude oil, West Texas Intermediate, up another 65 cents per barrel to 102 and 83 cents. AAA national average for gas prices also rising again, up another 0.7 of a cent to 4.51 and 1/10. And so no real major movement there, but continuing to see elevated pricing as one would expect, given the fact that this is your daily reminder that the Strait of Hormuz remains closed and 12 to 13 million barrels of production in the region remain shut in and not being produced. We also did get the EIA's crude inventory report about maybe a half hour ago. We're going to go through that later in the show, and so don't worry, we will get there. But top story, we're going to talk a little bit about U.S.-China summit that is going on now. President Trump has landed in Beijing. Either of you see the videos of the landing? Getting off the plane with Xi, walking him down. They got the red carpet rolled out. They got a bunch of people waving Chinese and American flags. All the fanfare and everything.
Very welcoming,
yeah,
it looked like.
A lot of fanfare. And ultimately, I'm still not really sure that too much comes out of this because I think there are just too many cross currents with the Middle East situation to be able to hammer anything large out as far as any kind of deal, because anything big that President Trump is going to ask for on, China helping with, getting Iran to loosen up, China's going to come back and say, okay, but here's the thing that I want from you, and I just don't think the Trump administration necessarily wants to give a ton in exchange for maybe help with the Iran situation. So this is kind of where we are right now is, we'll see what comes out of the next couple days. I think you probably get some, Chinese purchases of airplanes, maybe some Chinese purchases of farm, this and that. But I'm just not sure that there's going to be any huge deal that is reachable because there's too much other stuff going on right now.
Beans and Boeing.
Kind of what it feels like.
And it works for the president. He likes to play salesman.
It's fine.
He can announce a couple deals.
Yeah, it's some purchase orders coming in. Like there's nothing bad about that, but I think for anyone who's expecting a larger deal or something transformative, I would be kind of surprised if this is the time and context from which that ends up coming. I don't think so.
China would like cheaper energy, but they also like the fact that we're bogged down, right? So is there an argument that they don't want this Iran situation resolved?
No, I think ultimately the way I view it is China can deal with this for a time, but I don't think there's anything to me that would suggest that they want to maintain the current state of the Middle East because it's not sustainable for them long term.
Okay.
It's, again, no one knows exactly what's going on with Chinese oil inventories and production and this and that. Anyone who has studied it will tell you it's like studying anything else in China. You look at it, some of the numbers make sense, some of them don't. You try to glean what's going on from reading between the lines, but you can't get an accurate picture of it. So I do not have any unique insight into, how China is operating from an energy perspective internally right now. And most of the people that I trust on these things don't have any unique insight either. They just don't know. It's too opaque. So this is something where, again, over the next couple days, we'll see what happens. What is interesting is on Monday, originally it was reported that Jensen Huang, CEO of NVIDIA, was going to be going to Beijing. Then about halfway through our show on Monday, it was reported that he was not going to be going. And finally, late last night, turns out that Jensen hopped on a flight to Alaska to go and meet Air Force One as they refueled there before continuing on to Beijing. And so he did end up on the plane after a last-minute invitation from President Trump, is what the reporting is now. So I got to tell you, what do we think this means that they had to, pick him up in Alaska because of a last-minute addition to the delegation instead of having him originally scheduled to go. What are the possibilities there? Possibility number one, in my opinion. There's nothing related to American semiconductors that's going to be discussed, because if it really were something substantive, he would have been on the guest list to begin with.
Mm-hmm.
That's possibility number one. Possibility number two, something is, coming together late in the process, and maybe there is something chip-related that's going to come out of this. Does that really feel like how these things are normally orchestrated?
Maybe now it is.
I'm going to go with no.
We said normally. These are not normal times.
No, it's true, but I'm going to go with that. That's kind of a reach for me. Number three, maybe he just decided to show up in Alaska being like, hey, put me on the plane. I don't think so. That doesn't really seem like Jensen's, his shtick. So I think the most likely thing is it's probably, something symbolic. But I again, if there was something meaningful that had already been, 80% agreed to that was going to get pushed across the finish line between the meeting of the two leaders, he would have been scheduled to be on the plane originally, not meeting them in Alaska as a last-minute invite.
What is the agenda for this summit, by the way?
What's that?
What is the main topic? Is it just trade?
Yeah.
Okay.
Yeah, there's some AI topics that might be discussed as well. Potential like cross-border regulatory framework for AI is something that I've seen as well. I'm sure Iran will come up, but I don't think either side really wants to ask the other one for anything just because they don't want to appear to need help from the other on the issue.
Yeah.
So I think it's some small stuff, relatively in the broader context of, everything. Let's take a quick break. When we return, Ted Rossman from Bankrate joins us. We're going to talk to him about yesterday's release of the New York Fed's Household Debt and Credit Report next.
Subscribe now to our YouTube page, where you'll find daily interviews and full shows of the Financial Exchange. We'll get you caught up on anything and everything you might have missed right here on the Financial Exchange.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Over the years, it's easy to collect investment accounts, including old 401ks and multiple IRAs. But at some point, it can get hard to keep track of what you actually have. Too many accounts can lead to confusion, overlapping investments, and sometimes missed opportunities. Our new guide is called Consolidating Investment Accounts, and in it, you'll learn how to simplify your financial life, giving you a clearer picture of your strategy, your risk, and your progress. The guide will also walk through how to avoid common mistakes and build a more organized, intentional plan. Call us today at 800-393-4001 and get your free copy of our new guide called Consolidating Investment Accounts. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Some of the biggest estate planning mistakes are the ones you don't even know you're making. At Cushing & Dolan, they've seen it all. Plans that aren't complete, that only rely on a will or lack of funding of a trust. These are the kind of mistakes that can lead to probate, unnecessary taxes, or even putting your assets at risk. As your life changes, so should your estate plan. Marriage, grandkids, new assets, and even changes in tax law can impact how your plan should be structured. That's why Cushing & Dolan created a brand new guide called Detour Ahead, Estate Planning Potholes to Avoid. It walks you through the most common and costly mistakes and how to help protect your assets, your family, and your future. Call 866-848-5699 to get your free copy today. That's 866-848-5699. Or you can request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Alrighty, as promised, we're joined now by Ted Rossman from Bankrate, here to talk about the New York Fed Household Debt and Credit Report that came out yesterday. Ted, how you doing?
I'm doing well. Thanks for having me.
Ted, overall, just kind of 60,000-foot view, what did we learn from this report?
Americans have a record level of debt, so it's more than $18 trillion in total. I know that sounds alarming. I would note, though, that the growth rate has been fairly modest of late, and I actually view this as kind of a Goldilocks report, if you will. It's not too hot, it's not too cold. We have to remember that while debt may feel like a nasty word, some of this is a proxy for economic activity, like consumer spending, and sometimes it takes credit to get ahead, to buy a home, for instance. That's something that not only provides you with a nice place to live, but will hopefully gain value over time. Or student loan debt. I know it's a real drag on consumption for a lot of Gen Zers and millennials, but it also furthers your earning power and lessens your chances of unemployment. Even something like credit card debt, we don't want you paying those 20 or 30% interest rates, but this report doesn't distinguish between what's paid in full and what's not. Half of these cardholders are using cards for rewards, convenience, they're paying them off right away. I would actually view modest debt growth as reflective of a pretty healthy economy.
It seems like for the last few years, we've been hearing about a couple things. Number one is, more and more Americans are struggling to make ends meet and delinquencies are rising. But despite that, consumer spending continues to hum along, and we haven't seen any changes there. Is there anything in this report that suggests either of those may be changing?
Not really, which is notable in its own right. Now, maybe we just don't know yet with respect to the higher gas prices that have come about in recent months, because this report covered Q1. So it was really just the final month of that quarter where we saw the spike in gas prices. Credit card debt actually went down in Q1. A lot of that had to do with higher tax refunds and New Year's resolutions to pay off debt. The gas price issue is so interesting because I realize it's a burden on households. Like I don't enjoy it when I fill up my family SUV and it's $75 now and it used to be $45. I mean, you notice that. It's having an outsized psychological impact. It's not, as of yet, affecting overall spending as much, because we do have to remember that the average household prior to the spike was spending about $2,400 a year on gas. Now, maybe that goes up to $3,600 if you have a 50% rise. I don't want to minimize that. Like, I'd like to have the extra $1,200, but it does only work out to $100 a month. And a lot of people are absorbing that through wage growth, through higher tax refunds, maybe a little bit of cutting back elsewhere. But honestly, we're not seeing a lot of that as of yet. What we're hearing from banks, credit card companies, travel providers, restaurants, for the most part, people are kind of spending as they were. So it's one of these, don't underestimate the resiliency of the consumer. I mean, again, I don't want to minimize the pain at the pump. It's felt most acutely among lower income households, but Amex and Chase and a lot of other companies are saying people are still spending pretty robustly despite this spike.
Ted, I've got a theory that I've been, kind of on for the last couple of years, which is it kind of pulls that thought together, which is that the level of wealth and income disparity has gotten to a point where the people that are in trouble, just it doesn't really even print in the broader statistics because of how skewed things are. Is that possibly a way to square that circle?
It could be. Well, there was that Moody's report not long ago that said that the top 10% of earners are accounting for 50% of all spending, which is an all-time high. That gets back to that K-shaped economy idea that we've talked about, that the rich are getting richer, the poor are getting poorer, the gap is widening. American Express is an interesting lens on this. They reported earnings recently. They were very positive. They were talking about how much people are spending on travel and restaurants, and their CEO had a quote to the effect of, "Our customers don't care about higher gas prices." Now, maybe that seems a little flippant, but it's true that this is a higher income audience. There are a good number of credit card holders, about half overall, that are paying in full every month. I mean, these are the kind of people that are traveling, they're going out to eat, they're going to concerts and sporting events. And I know that gap is widening, but it does feel like there's an awful lot of discretionary spending going on. Travel's another interesting one. We've just seen record after record the past few years. And even this year, travel bookings are holding up remarkably well. I know it's alarming when you hear airlines going out of business like Spirit because of higher jet fuel costs, but then you hear a lot of other airlines saying that summer travel demand is still quite hot. So a lot of this does track back to economic inequality.
Ted, appreciate you joining us today. Thanks so much for the time.
No problem. Thank you.
That is Ted Rossman from Bankrate talking about the New York Fed's household debt and credit report.
All right, time for trivia here on the Financial Exchange, and today is Stevie Wonder's 76th birthday. Wonder was a child prodigy and was the youngest artist to receive a record contract with Motown Records. Wonder would go on to win more Grammy Awards than any solo male artist in history. So our trivia question today, how old was Stevie Wonder when he signed his first record contract with Motown Records? Once again, how old was Stevie Wonder when he signed his first contract, or his first record contract with Motown Records? Be the seventh person to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the seventh correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Another just interesting Stevie Wonder fact, as long as we're talking about him, because, again, just pretty remarkable dude. Do you know that Stevie Wonder was not born blind?
No, I thought he was. Oh, okay.
He was not born blind. He was born early, though, 6 weeks early.
Mm-hmm.
And because of the extra oxygen in the incubator, he ended up with some condition that basically typically leads to detached retinas shortly after birth.
Gotcha.
And that's actually what ended up causing his blindness.
God.
So... again, I think just a remarkable human being, and I'm not going to spoil the trivia answer because I do know this one, but
I was stunned when I saw the answer.
It's
like, holy crap!
I mean, the word genius gets thrown around a lot. So, like, Stevie Wonder is actually a genius. Walmart is going to be laying off or relocating about 1,000 corporate workers. This is a Wall Street Journal exclusive. Not a huge number of employees in the context of Walmart's broader workforce, but continuing to see more companies indicating some layoffs that are percolating through the system, Mark.
Yeah, nothing systemic though, right?
No, I mean not at this point.
Millions of jobs turnover every month.
It's typically like 2 to 3 million that we see.
Yeah, it's like we read the JOLTS report when it comes in, and it's all right there. It's like several million people change jobs every month. I'm not saying this isn't like of interest if you're a Walmart shareholder or something.
Let's take a quick break here. When we return, we've got the trivia answer, we've got Wall Street Watch, and then we're talking oil after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
In Massachusetts, summer starts at the farmer's market. Longer days, fuller tables, and the best local food coming in fresh each week. Find just packed produce, responsibly raised meats, small batch cheeses, fresh caught seafood, and thoughtfully made goods. It's where neighborhoods come together and local food shines. Stop by your market this season and support farmers and makers across the state. Sponsored by Mass Farmers Markets. Growing farmers markets across Massachusetts. Find your local market at massfarmersmarkets.org.
Long-term care costs can reach thousands of dollars per month and can put a serious strain on your savings. The experts at Cushing & Dolan often see families caught off guard by that reality. Without the right plan in place, those costs can quickly eat through a lifetime of your hard work. But here's the shocker. Many estate plans don't protect your assets from those expenses. The right strategy may involve specific types of trusts designed to help protect your assets, but timing matters. Cushing & Dolan has a brand new guide called Detour Ahead, Estate Planning Potholes to Avoid. It breaks down some of the most common and costly mistakes people make and explains how to help protect your assets, your family, and your future. Call 866-848-5699 to get your free copy today. That's 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For many hardworking families and retirees, an energy bill comes with an impossible choice. Paying the bills, putting food on your table, and keeping your family warm in winter and your home cool for the summer. But it shouldn't be that way. For more than 40 years, Citizens Energy has made one simple promise: to help households afford life's basic needs. Through Joe for Oil, we help neighbors through the coldest winter nights. Now, we're building on that same promise with Joe for Sun, a new way to save on electricity year-round. Our solar projects are already in communities across Massachusetts and New York, helping thousands of households save money. For many families, that means saving up to 50% on electricity. No installation, no equipment, and you keep your utility company. Like my dad's program before, we keep it simple, helping lower your utility bill through community solar at no cost to you. Call 1-855-JOE-FOR-SUN or visit citizensenergy.com to see if you qualify. You've trusted Citizens Energy to show up when it matters most. We're still here, ready to help.
Sponsored by Citizens Energy.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your kids to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
You're absolutely right. It would avoid probate, but there are better ways to avoid probate than just doing something simple, right? It's not, simple isn't always better. Throwing a name on an account or adding a designated beneficiary or a joint owner on a piece of property might not be the best way to go. Here's the problem. If you name one of your children as a joint owner and you have 3 children and you put that child on just because it's convenient and they're geographically close to you, well, you could be accidentally disinheriting your other children because this property, this asset will only go to that child. That child doesn't have to give it to the other kids. So that's a problem. And if you put your name, if you add a child's name to your real estate, now you're exposing it to that child's creditors, that child's potential divorces. That's never good. And plus, you've lost control over it. If you try to sell it, you need that kid's permission, and half the money would go to that kid. Please, folks, set up a trust, fund your trust much better than just trying to do it shorthanded and just give away assets or adding names to accounts.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are mixed now, with tech seeing a rebound from yesterday's pullback after a hotter-than-expected producer price index was released this morning, where wholesale prices in April rose the most in 3 years, adding fuel to inflation anxiety. President Trump also landed in Beijing this morning with several CEOs, including Elon Musk and Jensen Huang, for his summit with Chinese President Xi Jinping. Right now, the Dow is off about 0.5%, S&P 500 up 0.2%, NASDAQ up 0.7%, or 182 points higher. Russell 2000 down about 0.25%. 10-year Treasury yield up 1 basis point at 4.49%, and oil up about 0.6%, trading right around $102 a barrel. Alibaba shares are rising 8% after it posted an 84% drop in first quarter profit and also reported heavy investments in AI. Meanwhile, according to the Wall Street Journal, Walmart plans to cut or relocate about 1,000 corporate employees. Walmart stock is mostly flat. Elsewhere, EchoStar shares are climbing over 4% after the FCC approved the company's $40 billion sale of wireless spectrum to AT&T, and SpaceX and NextPower shares surging 12% after the energy technology company raised its full-year revenue guidance. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question. How old was Stevie Wonder when he signed his first record contract with Motown Records? He was 11 years old. Steve from Amesbury, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Steve. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Just trying to think of what I was doing when I was 11.
I was probably playing Mario Kart, right?
Yeah. On a good day. You
Yeah.
know, there were days that probably couldn't even get to that level. Let's talk a little bit about this piece from Market Watch, why the oil crisis could become a full-blown catastrophe within a month. And it's talking about, the drawdowns that we're seeing of crude oil and refined product stocks around the world. And look, we've been talking about this for a while. I had the Cinco de Mayo date circled on my calendar since early March, and that's come and gone. And where we stand now in no uncertain terms is that you are now at the point where pretty much all the excess oil inventory that's been on water through floating storage, think tankers that have supplies that just have nowhere to drop it because, we had this glut heading into the year. That extra storage on water has been exhausted. Now we're drawing down on onshore inventories. And to put this in perspective, a couple weeks ago we covered the April 24th dated release from the EIA in which they announced that U.S. crude oil stocks declined by about 13.3 million barrels for the course of that week between U.S. commercial stocks and the Strategic Reserve. That was the sixth largest drawdown of U.S. Oil stocks on record. Today, 10:30 a.m., we received another weekly update. Last week's was let's go through last week's. Last week, what we saw was a case where we saw a smaller draw. Instead of 13.3 million barrels being drawn, we ended up seeing, hang on, I got to pull, here we go. It was 7.5 million barrels being drawn. About half the size. You say, oh, that's great. Things got better. The EIA release dates back about 22. We've got 2,200 items in the sample. This was the 117th ranked one. So it still is a top 5% draw historically, even though it was, much smaller than the week before. It just tells you how big the one the week before was. This week, 12.9 million barrel draw between commercial crude and Strategic Reserve. Strategic Reserve saw 8.6 million barrel draw. That's the biggest weekly draw on the Strategic Reserve ever. We've never seen one that big. Here's the deal. You look at the math, and in the United States, the commercial crude system needs somewhere in the ballpark of 350 to 370 million barrels to operate, just because you need, again, there's oil flowing through pipelines that are included in there. There's oil in tanks. If you get to zero, you've lost. You can't run the system with no oil in it. The Strategic Reserve can get down to somewhere in the range of 220 to 240 million barrels because you actually need the oil in these big salt caverns to prevent them from caving in, and some of it's also contaminated with sediment and brine that they use in order to the way that they empty these. They basically pump a bunch of water in underneath it, and that floats the oil because oil is less dense, so it floats. And in that process, some of the brine from these salt caverns gets mixed in, and so you can't use all of it either. But here's the deal. At the current rate of drawdown, the Strategic Reserve is going to hit operational minimums in September or October. You can only maintain this pace another 4 to 5 months. The commercial crude inventories are going to hit minimum operational capacity sometime in late July to early September. There's a ticking clock on this. You can only have this go so far. And the problem is, let's say that Hormuz opens today. Perfect opening, everything, great. The problem is there's no ships just waiting to get in, because if you own an oil tanker right now, you can get primo rates to be able to go and pick up oil anywhere you can, because Asia is desperate for crude and product. And so, great, you can get paid a ton of money to take your boat, and instead of going to Strait of Hormuz, okay, you're heading to, southeast, United States. The problem is this puts all these boats out of position to actually pick up the crude that could, in theory, be produced in the Persian Gulf, which means that even if Hormuz opens today, it's probably 30 to 40 days before you start to see any meaningful flow of boats going back to pick up oil that's in onshore storage in the region. And it's only once that storage is starting to drain in meaningful levels that you can start producing oil again from the wells that are shut in, which is probably another 30 to 40 days, and that has a ramp-up period as well. But it's probably 5 to 6 months to get back to normal pre-war production if everything goes perfectly from today. Guys, I did the math. It's very basic. It's addition and subtraction. You don't have to, there's no calculus involved. There's no algebra. It's basic math. U.S. inventories are going to hit minimum operational levels later this summer into early fall. If Hormuz opened today, you get back to normal production somewhere mid-fall. And that's a best-case scenario, because I got to tell you, Hormuz isn't opening today. It's not. And so where you're heading on this is the U.S. has been the relief valve for the last few weeks for the rest of the world. That relief valve is going to run out of room later this summer or early fall. And in the run-up to that, prices are going to have to move up because otherwise you can't actually deliver all the barrels that you say you're going to if someone wants to say they're buying at certain prices. So the math is really simple. It's addition and subtraction. There's nothing else aside from that. And this is where we're heading, and there's nothing you can do at this point. I can't make that any more clear. Like, you can't fix this for the summer and fall. You can make it so that it's not a problem going forward beyond that. But once you, like, this is just what it is. And it's where we are heading. You are not going to see shortages in the United States, throughout most of it at least. California might, because they import a lot of stuff from Asia that was typically produced in the Middle East. So California's got its own unique issues, which could present some shortages. Outside of that, you're just going to see higher prices because the U.S. Consumer can pay more than the consumer in Pakistan and Thailand and Tanzania and Kenya. And, like, it's just a wealthier country. We can afford to pay more than those places. Those places will see shortages, which is why Narendra Modi yesterday was saying, yeah, we got to cut our fertilizer use by 50%. It's because India's not going to be able to pay for the fertilizer they need. We will. It'll just be higher. And, even at a certain point there, farmers will say, no, I can't make money doing this. So this is where we're heading. I don't think it's going to be a full-blown catastrophe within a month, but again, this is where we are heading, and there's nothing we can do to change it at this point. Let's take a quick break, and when we return, Stack Roulette? Yeah, it's that. Tucker, this has been a quick show today.
Yeah, it's flown by.
Yeah, it really has. Stack Roulette is next.
Get real-time financial insight as news breaks. The Financial Exchange is live on X. Watch the show and follow us for the most up-to-date business news you need to know. This is the Financial Exchange. Some of the biggest estate planning mistakes are the ones you don't even know you're making. At Cushing & Dolan, they've seen it all. Plans that aren't complete, that only rely on a will or lack of funding of a trust. These are the kind of mistakes that can lead to probate, unnecessary taxes, or even putting your assets at risk. As your life changes, so should your estate plan. Marriage, grandkids, new assets, and even changes in tax law can impact how your plan should be structured. That's why Cushing & Dolan created a brand new guide called Detour Ahead, Estate Planning Potholes to Avoid. It walks you through the most common and costly mistakes and how to help protect your assets, your family, and your future. Call 866-848-5699 to get your free copy today. That's 866-848-5699. Or you can request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the biggest challenges in financial planning is seeing the full picture. When your investments are spread across multiple accounts, it can be difficult to know how much you actually have and whether your strategy is really working. You might be taking on more risk than you realize or missing opportunities to better align your portfolio. Bringing your accounts together can help create clarity so you can see your total assets, your true allocation, and make more informed decisions about your financial future. Our new guide is called Consolidating Investment Accounts. It walks you through how to get organized, simplify your strategy, and build a more complete financial plan. Call 800-393-4001 to get your free copy today. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
For many families, an energy bill can mean difficult choices, wondering when or even how it will get paid. It shouldn't be that way. For more than 40 years, Citizens Energy has helped families afford life's basic needs. First through Joe for Oil, and now through Joe for Sun. A simple way to save on electricity at no cost to you. No installation, no equipment, and you keep your utility company. We keep it simple and help you lower your utility bill. Call 1-855-JOE for Sun or visit citizensenergy.com to see if you qualify.
Sponsored by Citizens Energy.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Market insight, retirement strategies, real talk about Wall Street and economic trends. All live every day on our YouTube channel. Go to youtube.com/The Financial Exchange Show. This is The Financial Exchange.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Registered today for this year's DAV 5K on Saturday, November 7th at Fort Independence on Castle Island. If you're not able to participate, you can still support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
Mark, what do you have for me for Stack Roulette?
You just gave a little masterclass on oil prices and their relationship to inventories and so forth. Related to that, there are a bunch of stories about politicians who want to cut the gas tax. You made the point about high prices serving a, I'll put it in my words, these weren't yours, they serve a function. Prices will induce people to change their habits. They did in the 1970s. We ended up with more fuel-efficient cars. Government played a role there too. But you want prices to rise so that people do change their behavior, and you want demand to go down for the same reason. So gimmicks like cutting the gas tab, my favorite tax rate is 0 on anything, as sort of a libertarian type person. But at the same time, this does fund the highway fund, which funds critical enhancements and repairs. So this is self-defeating on a number of levels.
It's also one where, again, like you look at this and, hey, think of it this way. The way that I also try to look at this is it's no different from any other. Think of this as a government subsidy, because effectively what you are doing is saying, hey, this is what you used to pay for this. We're going to give you money to cover that. That's basically what you're doing. I know that it's not that, but I find it instructive just to think of it this way. I know that you're removing a tax, but any time that you are giving people more money to buy something, you're not just keeping demand stable, you're actually increasing demand for it.
Yeah, all else equal.
Like that's basically what you are doing. And so it's accelerating you into the brick wall of supply that is coming later this year, and it's just not what you need in order to actually deal with this. Now, if you wanted, again, the problem is the timeline that you have here. There's basically nothing that you can do in order to improve the supply picture for oil in the next 3 months, absent opening Hormuz. Like you can't just like drill a bunch of oil in that timeline. Like you just don't have like the crews to be able to do so. It's not going to make long-term economic sense. Even if, you could say, okay, like we'll guarantee, a floor for this because, hey, if you overproduce, we'll buy that oil in order to refill the SPR. How much production are you actually going to encourage in such a short period of time? is pretty small in the broad scheme of things. It's just, again, the last 3 weeks, we're averaging an 11 million barrel per week draw from the United States. You're talking 1.5 million barrels a day. There's nothing you can do to increase oil production by 12% in the next 3 months to balance that.
That's there for real emergencies, right? I know the SPR was created in response to the shortages.
This is a real emergency.
But in theory, yeah, it's, self-created, but yes, I suppose.
It is it's created specifically for, hey, if there's a global disruption to energy flows, this allows us to, keep things moving.
Yeah, I guess I think of emergency as something that didn't originate with U.S. action, but
it doesn't matter where it does or doesn't originate. It still is.
It's policy, so it does.
It's still causing a problem.
Yeah.
So ultimately, it's one where there's just nothing that you can do in that time span. Remember, the U.S. produces around 13 million barrels a day of oil right now, and that's with all of the years of work to get to that point. You can't suddenly just spool up another 1.5 million barrels a day of production. It's not possible in that time span. If you wanted to say, hey, we've got 2 to 3 years to do that, great. You can do that. There's nothing you can do that's going to start production, increases in the next month or two. It's not possible. So that's kind of where we stand.
Yeah, so let prices do their thing here, though. They will help to reduce it. Now, you may not like that option, but it's critical that you let the price mechanism function. Otherwise, you're just exacerbating an already bad problem. I'll just leave it at that.
Mark, we got another problem that we got to talk about here.
No, hopefully it's not employment related.
We got a tomato shortage.
Oh.
Yeah, there's a tomato shortage.
Yeah, I know.
Yeah, here's the deal.
We know.
I'm going to quote here from the Wall Street Journal. The price of tomatoes, top burst of flavor in salads and sandwiches, surged by nearly 40% in April from a year earlier on a combination of bad weather, high tariffs, and climbing transportation costs. Now, I happen to be... What's your favorite kind of tomato, Mark?
The free kind.
You like free tomatoes.
The kind from anybody's garden that they're going to give me.
Let me tell you, I learned something back in the day. There's no such thing as a free tomato. It's an old lesson that my father taught me. Yeah, there's no such thing as a free tomato. But we got a tomato problem here. The tomato prices are too damn high, and here's the problem, is that you got all kinds of tomatoes that are coming from Mexico. 70% of them are estimated to come from Mexico, where you had a bunch of wet weather and disease resulting in below normal yields. I don't know how we're going to do this. We can't make the gravy without the right amount of tomatoes, and the tomatoes are too damn high.
In all seriousness, no. I learned about this over the weekend. My father-in-law runs a restaurant. He was like, have you seen the price of tomatoes, by the way? They're insane.
Yeah.
I can't believe this. Yeah, so, I mean, for him to say that.
Yeah, there's no real
it's
substitute either. I mean, if you think about it. Some things you could swap out a reasonable facsimile. The tomato for a lot of recipes.
Put it on a burger, put it on a salad,
It's sort of irreplaceable.
Pizza places and sauces.
There's no such thing as synthetic ketchup, right?
You know that tomatoes are very closely related to eggplants? They're all members
I'm not surprised, given my palate. But
they're members of the nightshade family.
Yeah.
They're very closely related, actually.
That's strange, because one is packed with vitamins and the other is useless. Eggplant is not.
If you've never had a good eggplant palm.
My mom sometimes listens. Don't say that.
Yeah.
I love eggplant
Your secret's safe with me. Let's take a quick break here. We'll come back tomorrow, and hopefully we got lower tomato prices.